You're about to discover why your biggest trading enemy isn't the market, other traders, or even your emotions. It's a psychological mechanism so subtle that most traders never realize it's destroying their accounts. You've probably experienced it without knowing its name. That voice that tells you to close winning trades early because profits might disappear. The impulse to increase position size after a losing streak, the sudden urge to check your phone during a perfectly good trade. These aren't random behaviors. They're symptoms of unconscious self-sabotage, a psychological defense mechanism that your mind uses to protect you from success. And until you understand why your brain is programmed to destroy your trading progress, every strategy you learn will eventually fail you. The success allergy. Your unconscious mind has a comfort zone for how much money you're allowed to make, and it will sabotage any attempt to exceed that invisible ceiling. Most traders think they want unlimited profits, but their behavior reveals a different truth. Watch what happens when you have your best trading month ever. Instead of celebrating and scaling up, you'll mysteriously start making uncharacteristic mistakes, overriding your rules, taking unnecessary risks, closing winning trades too early. Your unconscious mind is pulling you back to your familiar financial comfort zone because success feels dangerous to your psychological survival system. This success allergy stems from deep-seated beliefs about your worthiness to receive money. If you grew up hearing, "Money doesn't grow on trees," or "Rich people are greedy," your unconscious mind learned that having too much money makes you a bad person. When your trading account starts growing beyond your internal comfort zone, your brain triggers self-sabotage behaviors to bring your results back to a safe level. You're not consciously trying to lose money, but your unconscious programming is working overtime to ensure you don't succeed beyond your perceived limits. The most insidious part is how your mind justifies a sabotage after it happens. You'll tell yourself the market was too volatile, or your strategy stopped working. You'll blame external factors instead of recognizing the internal mechanism that caused you to deviate from your proven approach. This rationalization prevents you from addressing the real problem, ensuring that the same self-sabotage pattern repeats every time you approach your psychological profit ceiling. Your financial comfort zone isn't just about absolute dollar amounts. It's also about the rate of change in your account balance. If you're used to making $500 per month from trading, suddenly making $2,000 in a week will trigger sabotage behaviors even if $2,000 isn't a large amount in absolute terms. Your unconscious mind interprets rapid financial growth as dangerous because it challenges your established identity and social positioning. You might worry about friends or family treating you differently, or fear that you don't deserve the success. The comfort zone also extends to winning streaks themselves. Many traders have an unconscious limit on how many consecutive winning trades they're allowed to before something has to go wrong. If you've never had more than 5 winning trades in a row, your unconscious mind will start sabotaging your decision, making on the 6th trade to maintain that familiar pattern. This isn't superstition. It's psychological programming that treats sustained success as an existential threat to your identity. The perfectionism paralysis. Perfectionism in trading isn't about wanting to be good at trading. It's about using impossibly high standards as an excuse to avoid taking action that might lead to failure. When you demand perfection from yourself, you create a psychological safe space where you never have to risk being truly evaluated. You can spend months perfecting your strategy, backtesting endless variations, and analyzing every possible market scenario without ever risking real money. The perfectionism isn't protecting you from losses, it's protecting you from the possibility of discovering that you might not be as good as you think you are. Perfect setups don't exist, but perfectionists wait for them anyway. They'll watch dozens of good trading opportunities pass by because each one had some minor flaw that prevented it from meeting their impossible standards. A support level that's not quite horizontal enough, a breakout that doesn't have enough volume, a trend that's not quite strong enough. By demanding perfection, they ensure they never have to face the reality of their actual trading performance. The perfectionism becomes a sophisticated form of procrastination that masquerades as high standards. Analysis paralysis is perfectionism's favorite weapon. When you can't make a decision because you need just a little more information, you're not being thorough. You're avoiding the responsibility of making a choice that could be wrong. The perfectionist mind convinces you that if you just study one more indicator, read one more market analysis, or wait for one more confirmation signal, you'll finally have enough information to guarantee success. But that guarantee never comes because the market is inherently uncertain, and perfectionism can't tolerate uncertainty. The perfectionism trap also manifests in how you handle winning trades. Instead of being satisfied with reasonable profits, perfectionists hold positions longer, hoping to capture the perfect exit at the absolute top or bottom. They'll watch profits evaporate because closing the trade at a good level feels like settling for less than perfection. This behavior transforms winning trades into losing trades, but the perfectionist mind prefers the loss to the discomfort of accepting an imperfect win. Recovery from perfectionism requires embracing what psychologists call good enough thinking. Professional traders don't aim for perfect trades, they aim for profitable ones. They understand that consistent profitability comes from executing many imperfect trades with positive expected value, not from finding the occasional perfect setup. Once you accept that good enough is actually perfect in trading, you'll discover something that changes everything about your approach: the comparison addiction. Social media has weaponized comparison in ways that previous generations of traders never had to deal with. Every day you're bombarded with screenshots of massive profits, perfect trade setups, and lifestyle content from traders who seem to have it all figured out. Your unconscious mind processes these images as evidence that you're failing compared to your peers. What you don't see are the losses, the struggles, the months of drawdowns, and the psychological battles that every successful trader fights privately. The comparison addiction creates a distorted reality where everyone else seems to be succeeding while you're struggling. Comparison doesn't just make you feel bad about your results, it actively sabotages your trading performance by causing you to abandon strategies that are working in favor of whatever the latest guru is promoting. When you see someone posting profits from a strategy that's different from yours, your mind immediately assumes their approach is superior. You'll abandon your proven system to chase whatever looks more profitable on social media, destroying months of progress in the process. The grass always looks greener on the other trader's screen, but switching strategies constantly ensures you never develop mastery in any approach. The comparison trap also affects your position sizing and risk management. When you see other traders posting large dollar amounts from their trades, you might start risking more than your account can handle to try to achieve similar results. You forget that $10 profit might represent a 2% gain for someone with a $500 account, while you're risking 20% of your $5,000 account trying to achieve the same dollar amount. The comparison makes you focus on absolute dollar amounts rather than percentage returns, leading to catastrophic risk management decisions. Comparison addiction creates a never-ending cycle of dissatisfaction because there will always be someone who appears to be doing better than you. Even if you achieve significant success, your mind will find new benchmarks to make you feel inadequate. The trader making $1,000 per month compares themselves to the one making $100,000 per month, who compares themselves to the one making $1,000 per month. No level of success provides lasting satisfaction when your self-worth depends on outperforming others. The antidote to comparison addiction is developing what psychologists call internal reference points. Instead of measuring your success against other traders' highlight reels, you measure your progress against your own previous performance. Are you making fewer emotional decisions than last month? Are you following your rules more consistently? Are you handling losses better than you did 6 months ago? These internal metrics provide genuine feedback about your development as a trader, while external comparisons only provide fuel for self-sabotage. Once you master this internal focus, you'll uncover the final piece of the self-sabotage puzzle. Comment below and tell me which of these self-sabotage patterns you recognize in your own trading. Because understanding why your mind works against your success isn't just about psychology theory. It's about recognizing that your biggest obstacle to consistent profits isn't market knowledge or trading skills. It's the unconscious programming that convinces you that you don't deserve success, that imperfection equals failure, and that other traders are somehow fundamentally different from you. Master these internal battles and trading transforms from a psychological war into a systematic business. Ignore them and you'll keep funding other people's accounts while wondering why your technical analysis skills never translate into consistent profits.